oh, trickle down economics or what have you. They're going to grow the economy, and the increased tax revenues, we're going to pay down our debt. That was the theory for years. That they're going to stimulate aggregate demand, and it's going to cause GDP growth, which will increase tax revenues, and we're going to pay down our debt. Well, that never, ever, ever happened, and predictably never happened. It was just about printing more money and a lot of malinvestment, that is to say, thieving going on, and the capital disappearing. Trillions of dollars just going into a global black hole controlled by the big four accounting firms, this floating casino that never pays taxes, which is now over $30 trillion in big, right?
In a recent display of Bitcoin dominance, Max Keiser, a well-known Bitcoin maximalist, has provided compelling evidence that Bitcoin continues to outshine other cryptocurrencies. The analyst recently took to Twitter to comment on the latest report by CoinShares, which highlights institutional inflows into crypto assets. According to the report, Bitcoin received a staggering $139.8 million in investments from various institutional funds. This accounts for 99% of all the inflows registered by CoinShares during the previous week. In contrast, other cryptocurrencies such as XRP, Ether, BNB, and Litecoin failed to match Bitcoin's performance. While strongly highlighting Bitcoin's superior position, Keiser proudly proclaimed that everything goes zero against Bitcoin. This statement summarizes institutional investors' overwhelming preference for Bitcoin over its competitors. Having said that, Max Keiser's observations and the CoinShares report provide a compelling narrative of Bitcoin's undeniable dominance in the cryptocurrency market. With institutional investors flocking to Bitcoin and mature holders accumulating the digital asset, it becomes evident that Bitcoin continues to solidify its position as the unrivaled leader in the crypto space. Let us now get into the video and listen to Max Keiser as he talks enthusiastically about the Bitcoin prospect and how various problems which arise in the financial system can easily be solved with Bitcoin. As you dive in, don't forget to hit that like button, subscribe, and drop your comments below.
And with Bitcoin, it's kind of the end of price discovery because everything will be priced in Bitcoin eventually. Everything goes to zero against Bitcoin. And so for someone like myself who's been following this for 40 years, finance, markets, technology, Bitcoin is the holy grail. It's the end all. I would say that my compatriot in all of this would be Michael Saylor, who really, when you hear Michael Saylor talk, he talks about the aesthetics of Bitcoin, the beauty of Bitcoin, and he speaks about it in a way that I think carries the torch from the Max and Stacy from 2011. He started buying it, I guess, when it was 10,000 or 12,000 or so in the 2020 era. So we were there from 2011 to 2020. I think he's kind of carried the torch from 2020 in a lot of ways, and introduced Bitcoin to massive pools of capital. I'm surprised that more companies haven't followed his lead, given the outbreak in inflation that we've had, exactly as he predicted it. The melting ice cube, as he called it at that time, is exactly what happened. And I'm surprised more companies, although I guess we could say now we are in an era where BlackRock and these other major institutions are now finally looking at Bitcoin. So his work on the institutional level, I guess, is bearing fruit now, 3 years later. And I see in the Middle East, they're starting to recognize Bitcoin. And so that's a huge pool of capital. I think all that oil money, when it finds its way into Bitcoin, will be a huge catalyst for higher prices. It's a natural way for the oil industry to diversify their portfolio and to because Bitcoin essentially is energy, and I think energy eventually gets priced in Bitcoin, and there's a marriage between these two in a big way. I think that's the kind of the answer. Is I've always been fascinated by price discovery in markets and kind of the architecture of markets and how markets work under the hood. And Bitcoin is just such a it's a pristine, perfect money, and I think it's something that humans have been searching for since forever. And now we're seeing it change society on really a fundamental level with the introduction of Bitcoin. It's a lot of people are freaking out because of it, because it destroys the status quo. And a lot of people who were kind of waiting for it to come along, who had the faith, that humanity could be saved. They see Bitcoin in those terms. So you have this split going on, which is very exciting. And so it just continues on and on. How could you not be interested in it? How could you? I think the people who were into it earlier and walked away just never got it from the beginning.
On the other hand, in addition to the institutional inflows, analytics company Glassnode shared an intriguing insight. The Bitcoin long-term holder supply metric reached an all-time high of 14.5 million Bitcoin, indicating that experienced investors are choosing to accumulate and hold Bitcoin rather than sell or distribute it. However, this data decodes a strong conviction among mature Bitcoin holders in the long-term value and potential of the flagship cryptocurrency. Max Keiser continues with his Bitcoin bullish countenance and also explains the institutional background plays going on in the financial system as regards Bitcoin. Let's now get back to the video.
Once it's categorized as an asset class, we have nothing to do except position ourselves in this asset class. Either we're going to be a small position or a big position, but we cannot ignore it. We cannot not have a position. And so even 1% of that multi-$100 trillion funds available, moves the needle on Bitcoin. It moves it up considerably. So if you get into the 5 to 10% range, and then you start to see it really race ahead to those very, very 7-figure type predictions that people have been making, including myself, for years, because it is an asset class. Now, on the flip side, you have what we saw in the gold market, which is that the ability to control price discovery and manipulate prices is real through the derivatives market. So the price of gold has been lagging inflation for 20 years because the governments around the world don't like gold making their fiat money look bad. So they make it easy for huge funds to manipulate the price of gold and to scalp and to continuously skim profits off gold, which is what they do almost every day. You can watch it and see it. It's pretty clear. And they are very good at keeping the price of gold and silver down. There are something like, for every ounce of silver, there's probably 50 ounces worth of derivatives floating in the various exchanges around the world that are used to keep the price of silver down, because governments don't want gold to race ahead and to draw capital out of their fiat money scam into gold. With Bitcoin, we have the ability to pull our private keys, which is not really available in gold. Technically, people can take delivery of gold on these exchanges, but there's never been an organized attempt to do so. We tried to do it a few years ago with Crash JP Morgan Buy Silver, because after the 2008 financial crisis, when JP Morgan ended up buying Bear Stearns effectively for nothing, they inherited this huge multi-million short silver position that Bear Stearns was managing at the behest, presumably, of the government. The government likes to stay involved. And so I did some calculations, and it became clear that if this short position wasn't covered, and the price of silver got to $60 or $70 an ounce, it would bankrupt JP Morgan. So we started this Crash JP Morgan Buy Silver campaign, and we got the price from 15 up to 50, which was the old a bunk, the bunker, the Hunt brothers. The Hunt brothers got a price up in the 80s into the $50 range, and they were cornering silver. So we got it back up to the old Hunt brothers $50 level, and then the feds, of course, came in and they changed the laws overnight to make it possible for these banks to have and carry much greater short positions in silver. So they printed up a lot of paper silver derivatives, and they stopped the run on their bank, and the price went back to 15 or so. So we've seen that it is possible to force capitulation in the silver market. But at the end of the day, because the ability to pull private keys is not like it is with Bitcoin, I don't think it will ever succeed. Whereas with Bitcoin, you can pull your private keys.
Shortly before Asian markets opened Thursday, a Bitcoin 24-hour roller coaster ride seen over, at least for now, with the largest cryptocurrency by market capitalization trading $29,096, about flat and back in the narrow $500 spread it has largely occupied since the last week of July. Investors appear to have cast aside industry-specific and macro events that sent Bitcoin's price surging past $30,000 on Wednesday amid reports of a Fitch downgrade of U.S. Treasuries and MicroStrategy plan to purchase more Bitcoin, but then had it plunging below $29,000 after news website Semaphore wrote that Binance could face federal criminal charges. In an email to CoinDesk, Jeff Feng, co-founder of Sei Labs, noted the swirl of recent news, including multiple applications for spot Bitcoin and Ether ETF, that are figuring in the crypto market's fluctuations and could lead to even larger price changes. We're seeing a multitude of influential factors at play, which includes corporate investments, regulatory advancements, macroeconomic shifts, and potential for increased accessibility through financial products like ETFs, Feng wrote. MicroStrategy's continued investment in Bitcoin certainly underscores their commitment, helping solidify corporate interest in digital assets. This, in tandem with anticipation around the upcoming Bitcoin halving event, is influencing market behavior as traders often view such milestones as potential catalysts. He added, "These periods that may seem range-bound could indeed be precursors to more substantial market movements. Staying informed about multifaceted influences is key for any market participant, from individual traders to institutional investors." Ether, the second largest crypto in market value, was recently changing hands at $1,832, also roughly flat over the past 24 hours. Other major crypto were largely in the red a day after swooping upward amid a wider market upturn. UNI, the token of the Uniswap decentralized exchange, and Bitcoin spin-off BCH were recently down more than 6% and 5%, respectively. And Litecoin recently plunged almost 6% despite the token's anticipated halving event, which cut miners' rewards in half, curbing the issuance of new tokens. The crypto market anticipates a considerable upswing in volatility. This is largely driven by factors such as the upcoming ruling on the BlackRock Spot ETF and the approaching Bitcoin halving. What do you think would be the price of Bitcoin by the next halving? We would love to know your thoughts in the comment section below. Also remember to support us by hitting the like button, subscribing, and turning on notifications to stay updated. Thanks for watching.